So friends, trading has three basic elements: where to enter a trade, what size to enter a trade with, and very important, where to exit a trade. So today in this video, we'll see a unique way to exit your trades. A very popular way is to have a predefined exit based on risk-reward ratio. For example, if your stop loss is 10 points, you keep your exit at 20 points if your risk-reward is 1:2, or 30 points if your risk-reward is 1:3, or 40 points if your risk-reward is 1:4. The problem with this method is that we are restricting our profits. Our stock can go well beyond our pre-decided 20, 30, 40 or even 50 points, and we will miss out on some really hefty profits. Therefore, for many traders, the choice of exit is a trailing stop loss. There are many ways to trail your stops. You can trail your stops based on swing lows, swing highs. You can trail your stops using ATRs, average true range. You can trail your stops using moving averages. But today, we will learn a very unique method of trailing our stop losses other than these conventional ones. Alright friends, suppose we are in a long trade and this is our entry candle. Alright, E. And this is our initial stop loss just below the low of this candle. Now we wait for a candle to form outside the range of this candle. Now suppose a second candle forms over here like this. This candle is within the range of our entry candle. We wait for another candle to form. Now this particular candle is completely outside the range of our entry candle. Now we move our stop loss from here, our initial stop loss, to the low of this candle. Now suppose another candle forms whose low is higher than this candle. We move our stop loss from here to here. And another candle forms whose low is higher than this low. We move our stop loss from here to here. Then if a candle forms whose low is below the low of this candle where our trailing stop loss is, we get out of the trade. Simple. Now let's take example of a short trade. Now suppose this is our entry candle, E. Alright. Our initial stop loss is just above the high of our entry candle. Now we want a candle to form which is completely outside the range of our entry candle. The second candle forms which is within the range of the entry candle. Another candle forms. This is also within the range of our entry candle. Our stop loss stays over here. Now another candle forms which is outside the range of our entry candle. Now we move our stop loss from the initial stop loss to over here, above the high of this candle. That's where our trail starts. Now if a candle forms whose high is lower than this candle, we trail our stop loss to just above the high of this candle. Another candle forms whose high is lower than this candle, we trail, and once a candle forms whose high is higher than this, we get out of our trade, and this is where we exit. Alright, so this way we will be able to trail our stop losses, protect our profits, and ride on long trends. Come, let's see this on the charts with various examples. So over here I have Nifty 50 weekly chart. Alright, This is the October month of 2020. We had an all-time high over here and Nifty broke above the all-time high. So suppose this was your entry candle, alright, this one. Now, where will you keep your stop loss? Initial stop loss will be just below the low of this candle. Now, we want a candle to form outside, completely outside the range of this entry candle. Well, the second candle, if you see, is well above the range of our entry candle. What do? We move our stop loss from the initial stop loss over here to just below the low of this second candle. Then this candle has a low which is higher than this candle's low. Again, we trail our stop to just below the low of this candle. Again, if you see over here, we have a higher low. It's a trend. Higher highs and higher lows are forming. So what we do, we move our stop to over here, then over here, then over here, then over here, and then the low of this particular candle is taken out by this candle. Our trailing stop loss is taken out, is hit, and that's where we take our exit. So now let's take a short example on Bank Nifty weekly chart. So this is the time where COVID crash happened and this swing low over here got broken. Now suppose you would have taken entry over here. I'll zoom in. This is our entry candle. We put our stop losses just above the high of this candle and the second candle forms over here. Now this candle is within the range of our entry candle over here. So our stop loss sits nicely above the high of this candle, our entry candle. Now this candle forms. Now this candle also is slightly within the range of our entry candle. I'll just tell you. The low over here is 21351.7 and the high over here is 21462.4. So this is very well inside the range of this candle. Now this candle forms over here. This candle now is completely outside the range of our entry candle and this becomes our first candle where our trail starts. So now what do? We move our stop loss from here, the initial stop loss, to just above the high of this candle. Alright, now next candle forms whose high is above the high of this candle and this candle will take out our stop loss and this is where we will take our exit. Now let's take a couple of examples on TCS charts. So this is TCS monthly chart. Now this TCS was at all-time high over here. The all-time high broke over here, all right, in January 2018 and this is our entry candle. Okay, we put our stop loss just below the low of this candle. Now a minor retracement, a copybook retracement after a breakout, all right. But now this candle and this candle are not outside the range of our entry candle. So our stop loss nicely sits over here below the low of this candle. This candle now forms again. Is this candle outside the range of our entry candle? No. This candle is completely outside the range of our entry candle. Now our trail starts. We move our stop loss from here to here. Now this is again a higher low. Our stop loss moves here, moves here, moves here, moves here. It gets taken out by this nice engulfing candle and we happily book our profits. Now again in TCS itself, all-time high was broken in July 2020. So this becomes our entry candle. The next candle, small little doji over here. This is not outside the range of our entry candle. This candle again is not outside the range of our entry candle over here. Alright, so our stop loss sits nicely below the low of this candle. This candle. This is where our trail starts because this is completely outside the range of our entry candle. Our stop loss moves from here to here. Then a high low forms. we move our stop losses to here, a higher low over here, a higher low over here, and then one tick takes away our trailing SL over here, and we happily take what the market gives us. Since the time I've entered the markets, I've heard this a lot, that trend is your friend till it bends at the end. So this is one way to make sure that trend is your friend until it bends at the end, just like we saw in these examples. You can apply this exit method in your already existing strategies and see how it works. If you really like this method of taking your exits, let us know in the comments section below. Please like the video, please subscribe to our channel, and don't forget to share it with your friends.